partnering with a private hedge fund with hundreds of millions of dollars of assets under management.
I only scale from intraday to swing. I never try to go from swing to intraday. Because, for example, if I have a good entry point and I know that the news can move the market in my direction, I will try to hold it. I always say that the technicals give you the perfect point, but the fundamentals give you if the market is going to go from A to B or from B to A.
Albert is a trader, hedge fund manager, speaking on how to use the economic calendar with CPI, NFP, and FOMC to build a trading plan and strategy with fundamentals linked with technicals. Okay, how can I use the economic calendar or the red folder news? How can I start to build a thesis around this?
I'm going to give a very practical tip for people that is watching at home and they don't have access to a Bloomberg terminal or something like this. Just grab the economic calendar and just see 90% of the successful profits were run by marketing people, not by financial people. And you see how they are not here. Profits are not perfect, but are better than trading with your money. Who gives you this profitability? Imagine you are investing 1,000 on a profit and you are withdrawing 10. You can do 10 times your money in the market.
What is your advice to a trader who doesn't know what's going on and doesn't really have the time to research every prop firm? How can somebody say, okay, these ones, if they have these things, it's predatory, red flag. Or a prop firm like this has these conditions, good, let's put your money here.
What I did for myself.
You have an interesting story. So from the brief things that we were discussing just now, you have affiliations with hundreds of millions of dollars in management. We'll get into that later. But being in a regulated space with other people's capital, that's a pretty unique story, especially with your age. Yes. And you've been trading for a decade yourself before you got into the other people's money side. So before we get into the life story, the university dropout, all of these kind of fun things, let's start off with the beginning of your trading. You've been trading for a decade. I'm sure you've gone through many strategies, many courses, many styles. What is the way you trade and what is your beliefs within the market?
My name is Suriol and thank you so much for inviting me. Well, I've tried everything before journey. The first time in trading was like the most difficult time of my life. It's 4 years of trying things, not finding nothing good. The good thing is that I didn't bought any course at the first. Just bought a course to it was like a fund manager in Spain that his name was José Antonio Madrigal. He was doing just stocks in long term, just monthly and weekly candles. So it was like nothing related to what I do nowadays, that it's futures and all that, no? So I've tried everything, and because I had no money, I started moving from monthly to daily to 1 hour to until 1 minute. So I've migrated my strategy from stocks to Forex. But what it was good is that this first mentor put me in my head that, hey, this is difficult. High profitability doesn't exist. Focus on doing 20-30% a year and you will be very good trader. And 10 years later, I have my own investment fund.
There we go.
So
when you were trading in your own capital before you transitioned to other people's money, what kind of style did you have? Or what kind of, let's say, walk me through your strategy of what is a good trade for you.
I always feel comfortable in intraday strategies. So I've tried scalping, but it was not for me because too much trades. Now I understand that for doing this amount of trades, you need to have a very, very good data providers. It's not only the candles and the 1 minute chart. It's not like this. I think that intraday trading is what you have the most profitability and statistics on your side, because if you just look at the fundamentals, try to find these 2-3 trades a week, be in the right time in, right time out, know how much it's the range of the market that is going to move. You can start with this flow in the market that, okay, I understand what's happening. I understand these technicals aligned with these fundamentals, sorry. So these 50 pips are able to happen. It's a big how said, you have big odds to.
So when you're looking at an intraday profile and you're looking for, let's start off with the technical side.
Yeah.
When you're trying to make a decision based on technicals first, and then let's bring in fundamentals in a moment. What is the decision-making process? For example, like a market structure or support and resistance, Fibonacci's. What is your, let's say, top 3 confluences?
I always say that you have to go from the bigger picture to the intraday chart. So it means that I always say that market divides in the trend, the intraday trend, and the momentum. You know, like trend, direction, and momentum. You have the trend first, uptrend, downtrend. Then you move from
that trend. Which time frame is important for you, or most important?
Weeks, for example, days, between weeks and days. Then you can move from the trend to a medium point between the momentum on the trend, that it's the direction. Maybe you are in an uptrend, but you have the opposite direction right now. Maybe you are in a downtrend, but you are in an upside move. It doesn't mean that the market is gonna go up. If you throw a phone from a 5th floor, it will arrive to the floor and it will just go back again some meters. But it doesn't mean that it's gonna go up.
Yes,
you
yes,
know,
yes.
crypto,
Good analogy.
crypto space. What happens every time that the market dips, goes to the south, like 10K in Bitcoin is like nothing happened. 20% is nothing. It goes up 2%. It's bull run's here. You know, like people don't. They are not like, how to say it. They are not.
Well, the emotions come in too much.
They are not practical with the markets. You have to be logical. So I first of all try to do this, and then I move back into the momentum. So first of all, I'm trading with the trend. I'm trading without the trend in my favor. First of all, know this. Then move back into this mid space. That okay. What movement is the market going right now?
So out of the dozens and dozens of prop firms that exist in the whole space, who can we really trust? Whether they use slippage, whether they use types of drawdown, unrealistic trading conditions, every single prop firm has hidden tricks. So after thorough research and speaking to a lot of traders, Alpha Capital is definitely the best prop firm in the space. So apart from their no commissions, low spread, no slippage, great reputation, never denying a payout, because you are a Titans of Tomorrow viewer, you get a special discount on every evaluation just using the link or using the code TOT for Titans of Tomorrow. Okay, so now you're going from like trend and the higher time frame. Let's say you have a daily bullish, and then you get to the middle time frames, the 4 hour, the 1 hour. Now that is bearish. So you have the trend, which is going in one direction, but the median time frames, they're going in the opposite direction. Now you can also continue to sell to a demand area, or you can wait for the demand and wait to buy again. So will you trade intraday the sells, or only wait for the demand area and then, you know, the higher time frame move?
That's it. Dissecting the market between trend, direction, and momentum. When you know the trend, go to the direction. We are with the trend, we are against the trend, okay? Know this, and then move into the momentum. Look at London, Asia, New York. This is where you're gonna find the momentum. And this is when you go from 1 hour to maybe 5-minute charts. This is the space for looking into the momentum. For looking into the direction, go from the 1 hour and 4 hour charts, for example. Just see the market structure. And then if you want to know the trend, go for the bigger charts, from daily to above. So then you will dissect the market in different directions, and then here you add the fundamentals. And
okay,
you know, like first of all, know all the technicals, know all the directions that the market is going to move. And now, what makes sense because the fundamentals to do? To go with the trend, go against the trend because these fundamentals are gonna go out, and big hands want to have the price at this point or the price at this point. You know, it's like in the end, there's always a big interest behind every movement.
You know the saying, maybe you have it in Spanish too, but in English it's kind of like buy the rumor, sell the news. Whereas like, like a news event, something happens before and then after happens the opposite to what everyone's expecting. With that in mind, first of all, do you believe in that, or do you see that in the technicals? And how do you prepare yourself with, let's say, a big NFP or a CPI or FOMC, these big volatile events? I don't know if that's what you prefer or don't prefer, but these like big moments within the economic calendar. How do you align yourself technically and fundamentally with these big news events, with this in mind of buy the rumor, sell the news?
That's a very good point to put on the table, because I always say that there are two kind of news in the market: the direct impact news and the like low absorption impact news.
Interest rates,
you know,
and yes,
there are things that they're gonna move the market, but you're gonna see the impact during the weeks. There are things that they go just hard, and depending the period of the economy we are, the how to say it, the new is gonna give you the movement, or it's gonna give you the entry, because the price is gonna reach that level and then go the other way. So there is when we enter in more like complex stuff, like looking at the order book, knowing what point of the economy we are, you know. So I always say that's why I don't like simple strategies, because yes, you have to keep it simple a bit, obviously, but trading is not simple. This is made for selling.
People come on even on the show and they're like, keep it simple. You know, if it was that easy and keep it simple, everyone would be doing it fine. But the reality is you got to know a lot, and it's not just about knowing, it's knowing how to apply it, and then data. There's a lot more. Simple is the wrong messaging, I think.
It's not that easy, you know. I always say to people that I think that most of people, they are in the correct way, but they just are too much focused on like in the media and all that, and they see like all these people like doing good with trading. Maybe it's not with trading, So just follow your own path, because maybe you are in the correct way. Just it's a difficult business. How many years is being a lawyer or an engineer? It's 4 years.
Exactly. Anything in life worth having takes years and years.
And trading, you will get 10 times more money than these jobs. So it's difficult. It's not simple.
I want to come back to this point because I haven't actually spoken about this with anyone of the impact and the approach with like high impact news that has the moment or has the effect in the moment, and then it's kind of that slow absorption. More geopolitical factors, like the effect of inflation and these kind of things. First of all, which ones in both categories are important to you? And second of all, how do you use them? If they are, let's say, they're aligned, you make a decision, or if one is saying the opposite of the other. Because fundamentals is not my area, more technicals. But I think this is an interesting topic for people to kind of see, okay, how can I use the economic calendar or the red folder news? How can I start to build a thesis around this?
I'm going to give a very practical tip for people that is watching at home and they don't have access like to a BlockBerry terminal or something like this. Just grab the economic calendar and just see what news are going to happen this week, like the most high impact news in which pairs. For example, if you have important news for the GBP and for the dollar on Thursday, what are you going to trade on Tuesday? It's like the day of this pair of GBP USD will be on Thursday.
Okay.
The rest of the week will be putting the price in a point that when the news release, it's the most profitable point to enter into the market. Then you only have to know the direction. What direction is the most profitable for going in? That's a deep work, obviously, and it takes years to understand this. It's not only understanding the fundamentals. Like, for example, if we have bad inflation, it's going to go that way. If you have good inflation, it's going to go this way. It's just make it practical for the people that's starting. Look at the calendar and then just grab the pair for the day. If, for example, you trade gold, you trade S&P 500, and you trade GU, for example. On Friday, there is non-farm payroll. Okay, you know that maybe the week of employment, you have these 3 important announcements about employment. So wait the first, see what the first, like for example, wait to ADP or to the JOLTS, I don't know how to say it in English, to the JOLTS inform, and then trade between, for example, Thursday to Friday. That you have 2 data on your side, and then it's only missing the last one, the non-farm payroll. So less trades, more accuracy, go that way.
As a trader, it's very simple. You have to find an edge and then you have to have a mind so you can follow that edge. But how do you know if you're performing correctly or not? You have to know your data. And TradeZeller is going to show you everything that you need beyond the surface level win rates and performance and equity curve. It's going to show you detailed reports. It's going to be your back testing tool, strategy testing tool, playbooks, notes, and it's going to be a full journal. It makes your journaling easier, faster, and more meaningful. Whereas if you were just documenting on an Excel spreadsheet or taking screenshots on your iPhone, you wouldn't be able to pull out the data that you need. The correlations that the AI within TradeZeller is pulling out for you. There's so much variety and utility within the software that I think it's essential for any trader. So the link somewhere below is going to take you directly to the TradeZeller website. I'm not getting paid. This is for you. If you want it, if you like it, go ahead and explore it. And probably you'll be using it for years to come. Okay, let me throw a scenario. So let's say the market on the higher time frame is bullish. When you have a bullish market, you have obviously levels of support or levels of demand, technical points of interest. Let's say now it is a Tuesday and you have the economic calendar saying on Thursday, Friday, there should be action. So it's Monday, Tuesday. And you see the demand area is here and price is a little bit above. So you could start to say, okay, price could come down to this demand area during the week. And then on Thursday, Friday with the news, go and continue the trend from this demand area.
Depending the pair. Depending, for example, if let's say it's euro dollar, okay? And let's say that for example, the non-farm payroll, it should be good for the dollar, for example. It means that it has more probability to go down the euro dollar. So you will try to sell at the top of the week.
So you'd sell during the week before the news until the demand area.
I will try to.
And then when the news event happens in the demand area, let's say it's arrived at the demand area, news event is happening. Is this now a catalyst to find an entry to allow the trend to continue?
I prefer to be inside before. So you can try to protect your trades.
Makes sense. So let's say the news event is like just after New York Open and you're trading a Euro USD. So let's say in UK time it's like 1:30 is the news release UK time. Would you trade the London session, try to be break even before, and then allow news to play?
For example,
or would it be the day before?
Or maybe I will try the day before.
Okay.
That's what some people ask me. You trade intraday or you trade like swing trading? It depends. This week maybe is worth trading like a bit swing because I find a good point with the three most important job news of the week. I find a good point of entry on Wednesday or on Thursday, and I can hold this trade. You know.
Okay, so you're kind
and
of
I can
seeing,
compound during the week.
Yeah, so you're seeing basically you find a good entry whenever that presents in the right area, and then you're using the news events to kind of like continue in that direction.
That's it. So
okay.
Market.
What about the opposite though? Because this is all making sense. Let's say you have a higher time frame bullish, the lower time frame is bullish, the news events is coming, you're in a demand area, and then you enter, and then the trend continues bullish. News event 1 boosts you, 2 boosts you, everything works fine. But what about in the scenario where everything was correct, and then news event 1 bullish, and then news event 2 came bearish, unexpected, destroys the trade, let's say, and comes back to break even? How are you managing? Because if sometimes you're intraday, sometimes you're swing. Obviously, if it's a swing, you're looking to hold. And if it's intraday, you're looking to take profit early. But depending on the news event's outcome, which you don't know, how are you planning the trade and planning your profit taking? Because you don't know, or do you already know, I'm going to do swing on this one, accept the risk, or this one is going to be intraday, accept the risk, or do you wait and see for the news?
I only scale from intraday to swing. I never try, or not so many times I try to go from swing to intraday. Because, for example, if I have a good entry point on Wednesday and I know that the news can move the market in my direction, I will try to hold it. But I never go the opposite way.
Okay.
I always say that the technicals give you the perfect point, but the fundamentals give you if the market is going to go from A to B or from B to A. You know, fundamentals give you the direction. Yeah. Technicals, it's the tool for the entry.
And are you more interested in the more direct impact news events, or are you still heavily considering the slow absorption events like you?
I love trading like this. I like to be like in flow with the economy.
Okay.
Being all day like reading the data, knowing how's the geopolitical situation worldwide, knowing how's the data impacting. So you can plan a strategy for the month, and then you can choose your trading weeks, what pairs you're gonna choose. For example, now we start having data release from enterprises. That's a good time to trade the S&P, for example, because it's gonna put some volatility there because a lot of CEOs of enterprises are gonna show their results and all that. So it will be good. For example, you know, last week, for example, let me think about some examples of it. We have, for example, dollar. In the acts of the Fed this week came that there was not like consensus of putting down the interest rates. You know, what that means is that the economy is maybe good, but what's not good is the inflation. But at the same time, we are in a point that the gold is skyrocketing. So maybe it's like a contradiction.
Yep.
Maybe I am gonna avoid gold this week, and I'm gonna focus more on S&P and euro dollar, for example. What I try to do is know what days I have to trade, and knowing which pairs or are good to trade on this week, for example.
Okay.
Avoid trades. Trading better.
This makes sense.
Trading better is very difficult. Trading bad has a solution. Stop trading.
Yeah.
No? It's a big difference.
Let's put this into kind of practical things, because everything you're saying is making sense, but I want the viewers to kind of take something home of like, okay, from next week or from the week after, I know I can look at the economic calendar and I see XYZ, red folder news. This is going to give me direction of, okay, if the technicals are aligning with these kind of events, then I know I'm onto something. But first of all, it kind of comes down to which points in the economic calendar are important or worth looking at. Is it just the big NFP and FOMC, or is there even the smaller ones that we see?
It's important to take a look at the smaller ones. For example, what we've seen this last month, for example, when the NFP was going out and people and also the inflation said, no, there's no inflation. But at the same time, there was the same day that the NFP releases, there is like a report that it measures like the wage that the workers are paid. And it was going up. What means? It's a way to fight the inflation. you know?
Yep.
So from one side, you're telling me that the inflation is going down. But from the other side, you keep raising the wage per hour of the workers. What means that maybe the inflation is not that good.
Mm-hmm.
1 month later, we had this narrative in the market that we don't have to worry about inflation, we have to worry about the economy. And then suddenly, the Federal Reserve dropped 0.5, okay? And now, when the actas, the inform of the Fed appears, says that not everybody wanted to lower the interest rates this big amount. So, what puts on the table that maybe the inflation is the problem, not the economic, you know? So again, the inflation is a big narrative, but we also have this clue there that the wage was going up while they were telling that the inflation was not going, while they were telling that the inflation was going down, you know. So you will find this kind of contradictions, and it will help you to avoid some pairs, and then you can just focus to read the inflation, NFP, economic growth, and every week we have this. For example, first week of the month we have this job. Then we have like every 3 months we have the data of the enterprises. Then you have like the inflation week. So every week there is a narrative in the market. Mm-hmm. Try to read this and try to read what weeks the narrative is contradictory, and avoid trading these weeks.
Okay, you know? Nice. And let's say you've identified a good week to trade and a good currency pair based on the fundamentals. Is that the starting point, or is the technical starting point? Do you start off looking at the economic calendar, knowing which one to avoid and which one to trade, and you're using fundamentals first? Or do you look at the technicals first, identify which one has a good trend, has a good point of interest? As in, which one do you start with?
I prefer to start with the fundamentals.
Okay.
Because it makes me make sense of how the market should look. And if I go into a technicals and it doesn't match what my mind is thinking, it's like, okay, just wait. Trading is a patience game.
Yep.
And we have to master that. It's very difficult. But that's why I put so many time on fundamentals. Because it makes me like, don't do like mistakes.
Yeah, I feel like this topic of patience and getting into trades too often, it's because traders that have a strong, or not even strong, let's say they overemphasize on technicals, but they haven't got clarity. They just have some concepts. They're going to be always thinking, okay, this is a break of structure. This could be a demand area. This could be a support level. There's always a reason to get in, but it looks like you're avoiding all of that problem, saying this is not the week, because economically it makes no sense. So you wait for the right time and then you find the technicals. So let's get into that last portion, which is you've identified the currency pair to trade. Fundamentally, things are looking like the narrative you want to. It's in the right area in the market, technically, in a demand area, let's say. How do you go from idea, zone, to actually execution? What is the confirmations to enter the trade?
I want to see in the technicals the discount. I want in my head to trade this fundamental. You know, if I want to go from A to B, but the market is here, take care. If I want to go from A to B and the market is here, good thoughts that is going to happen. You know, so just remove trades. It's the best advice I can give to people. Remove trades.
The slogan of my other channel, the main channel, is a restricted trade as a profitable trader. Exactly the same thing. Like, everybody can take wins, everybody can take good trades, but the problem is if someone's not profitable is they take great trades and they take a lot of bad trades as well, and it ruins everything. But if you just remove that, you can actually be in a better position.
People always say that, no, I can be profitable with a 25%
like the win rates.
Win rate, sorry.
Yep.
So with a low win rate, you can be profitable, yes, but the risk of ruin of your strategy will be very high. You cannot manage a fund with a win rate that low. So remove trades.
So this is actually where I wanted to get into, because your story is quite interesting. Not only discovering the technicals and fundamentals, but it's also, I want to start with my perception of the wealth management, the hedge fund side, is they are very backwards maybe in their thinking compared to like the social media people. They are very conservative. They don't like small stop losses. They don't like crypto. They don't like anything new. They're like stable, which is trading very simple technicals, support and resistance, big stop losses, focus on fundamentals, and very low risk, and kind of trading that swing trading approach. Now, the things you're kind of saying to me is more like, okay, I'm okay with the lower time frame. I'm okay with a smaller stop loss. I'm okay with a lot of technicals. Is that kind of ordinary in the fund space, or is this something you've done that's a little bit disruptive?
What I do with my fund, 20-30% of the trading is like value investment. It's less. I reply what other funds of our firm does. Okay, but 70% is day trading. Okay. So the thing is, when you are trading a fund, you have to you have like the regulatory pressure. You also have some costs that don't appear in the retail space. So what you're trying to do is to be accurate. Don't overtrade. So a lot of like day traders in the fund management space will look for this kind of trade that I'm explaining you. It's like precision, not a lot of trades. And while we do this, there is plenty of options of profiting the market with options and all that, and also covering your positions. For example, you are long in a lot of like stocks that they are in the S&P 500, for example, and you think that maybe the market can crash a bit, and you say, okay, I want to be comfortable with the situation. I'm gonna just buy some options in case that
as a hedge.
As a hedge. How much is it gonna impact to the fund? 1%. Okay, I prefer to take the loss. If the market goes to like 30%, how much I'm gonna lose? 10%. Okay, I'm gonna avoid this 20%. Risk reward, good. I'm taking a loss by buying this option because I know that maybe never is gonna happen, but I want to keep my profits from the rest of the year. So you are more conservative, and some of the trades that you do is not for winning money; it's just for saving money, for just covering your positions. And then when you have these long-term positions covered, you can focus on intraday. When I focus on intraday, the good thing is that I'm not exposed into a market, because I just go in and out. So it's a short time that I'm in the market, and it's 70% of the weight of my fund. What's difficult in the regulatory space to find that the regulator let you do this. For me, it's been the most difficult part, and this is not on my side. This is on my partner's side, that they are like. They've been trading for banks and all that. There are 4 people that they have like 30 years more experience than me, and they moved from trading from banks to build his own firm, and now I partnered with them. So that's why I have this umbrella of 650 million under management right now.
Wow, and that's a crazy amount. When you have such a large capital, over $500 million, and you are trading intraday and very technical based, was it hard to find investors that could accept the risk tolerance and also the way of trading, as opposed to just value investing like most institutions do?
First of all, not all this money is in the intraday fund. Most of the big part of this money is in the value investment part, but people want to diversify. People buy bonds, people buy intraday funds, people buy real estate, people buy long term. The correct thing is that to have a bit in every place and never load so much
in one area.
Because, for example, real estate is very safe, but it's not liquid. A fund maybe is not that safe, but it's liquid. You can sell it. When you have to just give advice to people, there are more things, not only about the profitability. You have to have compensation on your portfolio of investments.
The topic of the intraday versus the value investing, when you're taking that route and you've got the investors on now and they have accepted the risk based on the diversification, you're also doing some hedging strategies, you're showing them what they want to hear and the risk cutoffs and so forth. So now the investor is happy. If the investor is happy and you've shown a track record and everybody's happy, where does the regulator come in and what is their job and how do they help or make life difficult?
Okay. First of all our funds are public on Bloomberg, for example. You can check them. So what the work of the regulator is just looking that you are doing the things good, and that, for example, that you're not doing like contrarian trading with your money, that you follow all the policies that the fund has. For example, some funds let you leverage more, some funds let you leverage less. For example, in Spain, you have to be above X percentage all the time in the market. Every place has his own stuff, and depending what is your kind of strategy, some places are better and some places that are not good for this. So what I find finally, I went with Luxembourg. It was an existing vehicle. It was a SICAP UCIT. It is the most regulated. That it went to SICAP SIF, and now we move it to SICAP RIFE. That the RIFE umbrella lets you do a bit more, because you are still in a regulated space, but the regulator, it's like they give you a bit more of space
Okay.
for doing your own stuff. So how you cover that? You raise the barrier of entry. The minimum ticket of my fund is 250K. So you are considered worldwide and a professional investor. And you also, before going the fund, when you call the bank, okay, buy me this eSIM code. You also, before going into the fund, you just pass some contracts, let's say like this. Okay, this fund is doing this, so you know this and that and that. You know, so it's like, this is what the regulators look, that the people who is going into your fund knows the strategy, that they are not buying your fund like is a ETF, that it's gonna go 5% up or down. No, it makes sure that everybody knows what they are buying.
You mentioned also the diversification elements, and it was interesting for me because the experience I have with options is exactly as you said, where you're long on a position, you use the options as a hedge to protect yourself. So you're not really hoping to make money, or this is not the place you're making money. It's just a way to accept a loss or minimize risk. But when I went to the US and I did a lot of the podcasts there, a lot of people love to trade options and only options.
It's very popular there.
So they turned a hedging model into a tradable asset, which was an interesting experience. I want to hear your thoughts.
Futures market.
Exactly.
Futures
So
market.
exactly. So
it was made for covering like the for example, SOs and all these.
It was the commodities.
Yeah, all these commodities.
So, what is your view on that? Like the people in the US that love to trade options or futures, because FX is actually not that big over there compared to these. And I was surprised by that because in Europe, Forex is the main thing.
Yes.
But seeing how they're trading these things, which were, let's say, not supposed to be traded, and they're used by professionals as a hedging model, how do you view that topic?
I view it that maybe they are on the correct way.
Oh.
That maybe what we should not trade is the CFDs and all this stuff.
Why?
Because CFD, how many CFD providers there are? Lot.
I was just at the expo a few days ago. There's so many brokers, CFD brokers that I've never heard of. Sponsors this football club, sponsors the Premier League, sponsors this. I'm like, they have so much money and I've never heard of them, but they're hundreds of millions of dollars a year. Futures, I don't see them around.
You know, why? So maybe they are in the correct space.
Okay.
In United States, the markets are in the street. You know, everybody knows about the stock market. If you have this 401k, the pension plan, you can invest it into a market without paying taxes. Everybody knows a bit of markets. In Europe, we don't have this culture. So it's easy for the brokers to get the money of the people.
Yeah.
So you can just take a look at 10 different CFD, and both of them have different price. You know, so maybe you are in the wrong space, and maybe the correct way is to trade this more regulated.
Yes. What is your thoughts on that topic of regulation? Because because you've dealt with the regulator, the Spanish authority, you've gone through becoming regulated, and I guess regular conversations. When you see the US, and obviously they are like the gold standard in terms of regulation, everybody follows them. They are very restrictive on CFDs. They're very restricted on Forex and brokerages. Do you feel like that makes sense from a regulatory perspective, or what are they trying to achieve?
Obviously, I think that it's normal because money costs a lot to earn. Costs a lot to earn. So brokers are just stealing money from people.
So you mean like they're trying to protect people from this supernormal profit?
I think
that the brokers make.
Try to open an account to Interactive Brokers, for example. It's 10 times difficult that opening into whatever CFD broker. 50% of the people, they're going to quit opening the account just because it's too difficult.
Yeah, and that's maybe a good thing, I guess.
That's maybe a good thing. Yeah. How many people is losing money in the market?
Most.
A lot of them. Trading is a very difficult space.
You know something funny? So I have a restaurant that I go to very often, and I go there maybe 3-4 times a week. And every time I have a meeting, I say, let's go here. You know, it's a very common spot I go to. I'm not going to say the name because people are going to turn up. But what's funny for me now is because I've been going for like 2-3 years to the same place. I got to know all the staff, and they got to know, okay, I'm a trader. More than half of the waiters there, they trade, and they trade Forex. So they started watching the show. Shout out to you guys. They started like watching some videos. So I asked them, and they always come to me. If I have my laptop, I'm working, they're always checking, like, is he taking a trade right now? And I find it funny that pretty much all of them have no plan, no strategy, no anything. They're just like, CPI is tomorrow. I'm gonna risk 50%. I'm like, bro, come on. Like, but this is the level of the majority. Like, just open an account, hope for the best. Don't really want to learn. Don't really have time. They just want to follow signals, and therefore predatory behavior can it becomes very normal.
Let me explain you something. You know that I have this institutional side from my investment fund, but at the same time, I have the retail side that I have my own prop firm. Sometimes people, they get the real account, and in 5 minutes they are like, where is my creations? I have to trade. I have in the super chat. I'm seeing a trade in euro dollar and I cannot being able to make it. They're like, hey, take care, just chill. Now we send you the credentials. It's like people is obsessed with trading.
Yeah.
There are not this amount of good trades in the market, and finding a good trade, is more difficult than what people think. So chill, take it easy, put more time in fundamentals, in understanding how the global market works. One thing that made me profitable years ago was understanding the global economy, how it works, the difference between a CFD, a future, an option. When you know what is everything used to, you understand a lot of movements that happen in the market. That if you are only looking super and resistance, you will never understand it. Okay, so when you understand that the whole picture makes sense because some things, then is when you can go from the bigger picture to the day to day and start finding trades in the midweek. You know, if you don't do it like this every day, you will open the laptop and it's like, what's the trade of today? Why you open the laptop looking what you have to do?
Yeah.
Just read the market first and then find trades. People do it the reverse. They go find trades and then when they blow the count, they blame and start trying to look why I fail.
Yeah, I like to tell people there's actually 3 types of trades in the market. There's buy and sell. People stop there. The third one is cash, no trade. That's actually a position.
Just look Warren Buffett this year.
Yeah,
he was on cash. He was sitting on cash. Berkshire Hathaway was still growing. Why?
Yeah, value investing. Okay, I want to get into this topic of, let's say, I think we can speak a long time on like the beginner trader and all the things that they need to do. But I want to actually move, because of the unique insights that you have, to the next stage, which is, let's say you are a profitable trader and you've got a strategy. Maybe with prop firms, you make a bit of money. Maybe you put some money into a brokerage. You got a personal account, prop firm account, and you're in this good area. And maybe the goal of like a hedge fund and everything is so far away because you're just trying to say, I want to quit my job and make this a full time. That's maybe the goal for most people. It's just, I want to make this my full time. And I want to see if we can take some of the mentality of the hedge funds and bring it down to the individual level. For example, as you said, diversifying your risk across using options or getting a bit of money into different asset classes and maybe some value investing, but on a personal level. I want to see if you have any advices that you use in the hedge fund space that you could bring to an individual level, assuming they know what they're doing. They're not a gambler. They're not crazy. They're profitable. They're consistent, but they want to diversify themselves a bit more.
A hedge fund, what a hedge fund wants is making sure that you know what you're doing, that you understand the markets farther than open the laptop looking for a CFD and going to trade. As I told you, like understanding the global economy. When you understand everything, you can play safe there. And what the hedge fund doesn't want is the client calling or the regulator calling. So first of all, this starts with knowledge, and second, with self-control. They don't want to see a trader like we used to see in the movies. You know, they want to see a trader that he's with the feet on the floor, that he's calm, that he knows when to be into the market, when to be out the market. They want to see a trader that spends more time learning, studying, analyzing than doing. They want to see all this stuff. So what I will say to any retail trader, as maybe we can talk later about a bit my story, but how I did it like this: just understand the global economy, understand everything, and then once you understand in what playground you are playing, learn how to play, and go little by little. You can start by CFDs, doing swing, then move to intraday. Try to have a good win ratio, because nobody is gonna lie on that. No, 20% win ratio is good. No, because it's a big drawdown, and the investor is gonna be nervous, and it's normal. It's his money.
Yep.
An investor is already rich. He doesn't want you to make him rich. He wants you to protect his money and gain a bit. It's a big difference that when it clicked my mind, I said, okay, now I understand. I don't have to prove these people that I'm the best. I have to prove these people that I know what I'm doing. So I'm not going to expose their money to a panic situation worldwide. They want to feel safe with you. And a hedge fund, when looking for a trader, they want this. They will prefer 10 times better a trader that maybe is doing 10% drawdown and 15% profit than a trader that is doing 30-30. You know.
Makes sense. Down to an individual level, is there many things you can do apart from the mindset of, okay, I got to be well-rounded, I got to understand technicals well and fundamentals and develop that mind as well. What about in terms of behaviors? Let's say somebody has $100,000 account of personal capital. So they've done quite well. Maybe they did it through prop firms. If they're sitting on $100,000, would you say trade at all, trade sensibly? Or would you say take 30, put it here, or take 50, put it here? Or would you just say keep doing what you're doing?
I will explain what I did, okay? Because I think that I don't have the correct answer. Nobody has it, I think. But what I did is like when I did my first 100K, what I did is like, if you lose 50% of your account, you have to do 100% profitability to make it back. So it's near to be impossible, this, okay? So I said, okay, if I'm gonna have the risk on the table, I have to go for all. So I'm gonna just keep 30K and I will trade like 100K. So what I have to do, have a big win rate, don't trade a lot. So I don't put chemicals in my mind, or mine work with chemicals. When you start winning, it's like drinking.
Dopamine, yes.
Dopamine.
Yes.
When you start losing, it's anger. You will see the world different. Everything, the trading, your girlfriend, your friends, because all these chemicals go into your mind. So first thing, if you're a trader, don't force these chemicals to come. How? Trade less. More space between decisions. Calm. More time reading the fundamentals, analyzing. Less time trading. So when you do it like this, a lot of things gonna happen in a very smooth way. So I did this. I started like having like my own prop trading with me. I had 30K, like 100K, and now you have the prop firms. Just put 30K on the pocket and use your 30K for prop firms and for keep leveraging with the prop firms. It's a very, very good tool.
Yeah.
Who gives you this profitability? Imagine you are investing 1,000 on a prop firm and you are withdrawing 10. It's a lot.
Yeah.
You can do 10 times your money in the market.
Yeah, in terms of ratio, like let's say you have a 100K account, for you to make the next 100K, you got to do 100% gain. And even with leverage and everything and sensible risk, that's going to take a long time. But let's say you just put all of that money into challenges and you start to get millions and millions of dollars. You just have to do like 5% on millions of dollars and you can make that same 100K. So in terms of leverage, that's the power.
The good thing of the prop firm is that allows you to find realistic returns on the market.
Yeah, as long as you have enough capital.
Yeah, that's it.
Yeah.
5% of 1 million is a lot for a retail trader. You can save 1 million in 1 year? No. If you're a retail trader, no. You can have 1 million allocation with prop firms? Yes. So go that way. This prop firm does this and that. Okay, don't blame. Use it. Prop firms are not perfect, but are better than trading with your money. Yeah. When you don't have money and when you don't have control of your emotions already. If you, for example, win 10% on your account and then blow 10%, you have zero. If you win 10% on your prop trading account and then you lose 10%, you still have 10%.
Yep.
So prop firms are a tool that makes you profitable before being consistent. And it's a must use for people.
With this topic of prop firms, you mentioned you have your own, which is probably more in the Spanish community. But I want to hear your thoughts on the red flags of prop firms, the dangers of prop firms, because there is also that side of every day I see a prop firm is going down. Every day I hear payout denials and just chaos in the industry. What is your advice to a trader who doesn't know what's going on and doesn't really have the time to research every prop firm and see, the full fundamentals of the space? How can somebody say, okay, these ones, if they have these things, it's predatory, red flag. Or a prop firm like this has these conditions, good. Let's put your money here. That selection process of a prop firm.
It's difficult. When I opened Wall Street Funded, that's my prop firm, what I was amazed is that nobody's taking a look at the risk desk of the prop firm. They're not covering the overall position. People sometimes asking, but you're putting me into real money. It's not working like this. If you have 1,000 contracts long, 500 contracts short, you have a difference between 500 contracts you have to cover. It works like this on every commodity that is on the prop firm with the whole amount of clients. So it's very difficult because you don't know what prop firm is doing really. What I was amazed is that 90% of the successful prop firms were run by marketing people, not by financial people, and you see how they end. They are not here, you know. So I will be crystal clear with that. Go with the prop firms that they are here for years.
Yeah, it makes sense.
And
the big ones.
Yeah, and maybe it's going against me, but it doesn't matter because I want people to keep their money safe. I had no money. Now I have money, and it's been difficult to be here. I don't want people to lose the money in the way. We're doing good. In 6 months we have a lot of clients, but just wait. Just wait for the new profits to be here like 2-3 years. There's no other way. I would like to explain, but there's no other way.
Yeah. With the topic of, you were saying, take your time, be slow to learn. Sorry, slow to act, less trades, more reading, more understanding the whole world. I want to understand exactly how to do that, because this is something a lot of people say, like, you know, be a well-rounded trader, understand all of the fundamentals and all the moving parts. But where can someone learn that? Because a lot of people end up buying a lot of courses. And for technicals, I think that makes sense because you can't go to university for technicals. But if you want to learn economics, well, there's degrees for that and they take it to a very high level. I want to understand the without buying courses, let's say the very famous, the very reputable, the books that have been around for decades that everybody knows about on economics, on geopolitical factors, on fundamentals, let's say, or just like, let's say Harvard University and these top Ivy League universities, they on their website, they have free courses. So you can actually learn so much from the institutions and the professional academic arena.
It's easier than that.
Okay, I was going to say, is it worth taking that route or something else?
Do you have ChatGPT?
True, yes.
Go for it, and it takes time. People want shortcuts. Don't exist. Open ChatGPT, open the chart, learn what means every data that is coming, and just backtest. Advice: what I did for myself, instead of recording myself, end of the trading season, Zoom meeting with myself, my idiot face. I share my screen. Today I did this and that, and I moved the stop and I trade. I put this trade and the new was releasing in 5 minutes instead of waiting to see the new. I just went into the market looking for the trade, you know. And every day after starting the next trading session, put the video.
Okay.
And hear yourself talking. When you look at yourself 5 days being the same idiot, in 1 week you will start chasing something. And then you will start realizing that making good decisions in the market is very difficult. Very difficult. So then you will start just slowing down. When we have to have respect for the markets. And it's a thing that's losing. We have to have respect. Going into the market is dangerous. It's very dangerous. So every time that you're going to put a euro in the market, think that you're going to lose it. Don't think about winning. Think that every euro put in the market is a euro lost. You will start doing the things in a very, very different way.
Yeah.
More calm. And when you start doing this, your brain slows down. You are more practical. You are more accurate because you say, okay, if I take that decision, maybe it's a loss. It could be a win, but maybe it's a loss. So trade less, record yourself, see what you fail, and then take notes about yourself. Know what are your predisposition. Some people is like more buyer, some people is more seller, some people is more, it's more revenge trading. Everybody have a personality. So you have to know yourself first.
Yes, I was going to get into that of like know yourself better. So a lot of people do the backtesting, they do the journaling. Maybe they use a Excel spreadsheet, maybe they take screenshots, maybe they use like a TradeZella or something. But you're kind of saying film yourself and talk to yourself. Why do you think that's more important than the way usually people do it?
Go for the easy stuff. It's very easy to write today. I've win this amount of money but when you have a losing streak of 2 weeks, that it happens when you are starting, it's not that easy. And at the same time, it's not good looking at yourself being stupid every day. You know, so you maybe start thinking, I have to change something if I want to arrive to March 30s doing the things good.
Fair enough.
It's like I always say, put truth in your life. If you don't put truth in your life, you can do 100 courses, every day backtesting, every day taking notes. But if you're not putting truth in your life, this work is not gonna. It's not going anyway.
Yeah. So you're at the age of 27. You've already achieved a lot, and you've built a lot of cool projects. And for the audience, that's very like, okay, that's great, but that's not my life. That's very far away. But I also want to spend the last moments of the podcast speaking about how you actually, just like them, where you were trying to do drop shipping, a shisha lounge, you're trying every single project, and you were a university student, and you ended up dropping out of university to go and follow your path of trading. So I want to give kind of that final advice to say, if they're in that situation, they're confused, they're lost, they want to do anything except have a job, which is what you said was your mindset. What should they think, or how should they behave as you were in your early days?
Long story short, I was studying mechanical engineering, and I have my own e-commerce just to try not to work to a third party and have time to do the mechanical engineering, trading, and running my side hustle. It was at e-commerce. Everything failed. I had 4 years full of failures. So if I can go back, because I come from a very humble family, so nobody thinks that I'm here because I have money on my back. It's very simple. Be patient and be constant. And sometimes we look for the advice of the year. But if I could talk with myself of like 10 years ago, I will tell myself, if you start doing 4 years, you are walking back. If you just focus on 4 years of learning and not going upfront, when the things start going good, you will start from 0, not from -10.
That's true.
And if we take time to think like this and to be patient on every decision we do, and to be like a sniper, like one shot, everything like very analyzed, I think that things will go 10 times better that this way of let's do things, let's trade, let's do e-commerce now, this, now that. Focus on one thing and follow this thing patiently. Because as I said at the beginning, how many time is being a lawyer, for example? 4 years plus the master plus this and that. In the end, it's 6-7 years. Why do you think trading or business is going to happen? Earning a bit of money, it's easy. Being rich is not easy. It's like this.
There you go.
There's no clue.
Albert, wonderful advice, especially that lasting comment of people just need to take their time, slow down. I think that was the theme across the podcast. Yeah, it's take the time, don't fall for the hype, and just stay consistent. So yeah, thank you very much for coming all the way down from Andorra, and you're only in town for a few more days. But just to wrap up, where can they find you?
Thank you so much for inviting. And sorry because my English, my first podcast in English,
it was very
and
good.
I was hearing myself. It's like I don't know how to talk today, but sorry, and I hope you enjoyed. Thank you so much.
There we go. Where can they find you? Your Instagram, your
Albert Suriol. My Instagram is Albert Suriol, and my profile Wall Street Funded, and my fund Lyros X.
There you go. Boom. Thank you very much, Mauro. Awesome.